Hi everyone. Welcome back to Indian Tax Planning, your trusted place for tax clarity. Are you a salaried employee who trades in futures and options, F&O? Did you incur a loss and now you are unsure about needing a tax audit? Or maybe you already filed your return and received a defective notice under Section 139(9). If you're confused about this for free 2024-25 or planning for free 2025-26, this video is for you. We'll simplify several important points. When is a tax audit required for F&O trading? Can you carry forward losses without an audit? How do you deal with a defective notice under 139(9). What's changed recently in tax audit provisions? Let's get started. Imagine this scenario. You are a salaried individual with 20 lakh rupees income. You trade in F&O and incur a loss. Your turnover is below 1 crore rupees. You file Letter 3 showing the loss. Then you receive a defective notice from CPC under Section 139(9). Now, is a tax audit mandatory to carry forward the loss? Under Section 44AB, a tax audit is required when 1. Turnover exceeds 1 crore rupees, or 2. You opted for presumptive taxation in the past 5 years, are now opting out, and your income exceeds the exemption limit. Note, the 10 crore rupees turnover limit applies only if cash transactions are less than 5% of total receipts and payments. Now, let's understand F&O turnover. In F&O, turnover isn't the total traded value. Instead, it's the sum of absolute profits and losses. For example, profit 3 lakh rupees plus loss 2 lakh rupees equals turnover 5 lakh rupees. So even with high trading volume, your turnover may remain below 1 crore rupees. Let's simplify whether you need a tax audit. Here are two cases. Case 1. If you did not opt for the presumptive scheme in the last 5 years, and turnover is below 1 crore rupees, no audit is required. However, maintain books of accounts and file Letter 3 with P&L and balance sheet. Yes, you can carry forward the loss. Case 2. If you opted for the presumptive scheme previously and now you are opting out with your income over the exemption limit, a tax audit is mandatory. You must file Form 3CB, CD along with a proper letter. Now, what if you receive a defective return notice under Section 139(9). This indicates that you either didn't attach financials or missed the tax audit report if necessary. The solution: revise your letter. Attach the profit and loss account and balance sheet, and submit a tax audit report if needed. Ignoring it can invalidate your return. Let's look at some examples for free 2024-25 and free 2025-26. Example 1, free 2024-25, turnover is 90 lakh rupees with a loss of 5 lakh rupees and no presumptive scheme used earlier. No tax audit is needed, file Letter 3 with books. Example 2, free 2025-26, same situation, but you filed Letter 4 last year. Yes, a tax audit is now mandatory. Example 3, turnover is 1.5 crore rupees with cash receipts over 5%. A tax audit is mandatory under Section 44AB(a). Now, here's a tax audit checklist for F&O trading. Turnover less than 1 crore rupees, no 44AD in past, no audit. Turnover less than 1 crore rupees, 44AD used in past, yes, audit required. Turnover greater than 1 crore rupees, cash greater than 5%, yes, audit is necessary. Turnover less than 10 crore rupees, cash is less than or equal to 5%, 44AD used, maybe, depends on opt-out status. Whether it's free 2024-25 or free 2025-26, the rules remain similar. What matters most are turnover, cash vs digital transactions, presumptive scheme history, proper documentation, need help filing, revising, or responding to a defective return notice? At Indian Tax Planning, we specialize in tax compliance for salaried traders and professionals. Email us at info@indiantaxplanning.in, WhatsApp +91 98718222710. Visit our website at www.indiantaxplanning.in. If you're watching this on our channel Indian Tax Planning, please like, share, subscribe, comment your doubts below. We reply to every genuine question. Indian Tax Planning, simplifying tax for every Indian.